Hello traders, in today's video we're going to be going over the Deribit options trading bot from 3commas. This is a tool that I found very helpful, and I think that 3commas has done a wonderful job at creating this, and I am proud to show you guys this today. Let's dive in. So before I talk about options and the options plays that Deribit offers, I'm going to ask you guys two questions. You are going to look at Bitcoin or Ethereum. In this case, we're going to talk about Ethereum, and we're going to build an options play together. So the two metrics that you need to think of are volatility and how confident you are in the bearishness or the bullishness of an options play, okay, of the price. So let's look at Ethereum. Let's say that I am moderately confident that this market's more bearish than bullish, and I think volatility-wise that we're going to see just an average amount of volatility, nothing too crazy, just about moderate volatility over the next 14 days. Okay, so the next 14 days, forecast how much volatility and forecast how bearish or bullish you think price will be. Mine, like I just said, moderate volatility and bearish, just as a random guess. Okay, so if we look here, we have Ethereum in 14 days, so that part's already good. And if I am moderately, if I think volatility is going to be moderate, and I think that the market's more bearish than bullish, then this is the option play that I have set up. It's known as the bear put spread, as you can see, and there's all these other strategies that you can pick from with 3commas. I'm going to use the bear put spread, and let me show you how this works. So the first thing is, I think that there's going to be just a little bit more volatility. So I'm going to click this button here, which increases how much volatility I'm estimating. This button would decrease the volatility, right, of the contract. So I'm going to increase it a little bit. So I think that there's going to be a little bit more than that volatility. So perfect. And bearishness-wise, I'm going to click this one more time. I think that we're a little bit more bearish. If I click this, it means that I think that we're a little bit more bullish. So I think we're a little bit more bearish. And the final thing you need to do for this options play to run is you need to tell it how much are you comfortable with losing. What's your maximum loss? Mine here is $200. So if price goes to 390 and anywhere lower than 390, as you can see, I will lose 185 after fees, maybe around $200. But if price goes anywhere below 340, I make 362. Not only that, but if price goes anywhere below 372.9, I make money, I profit, as you can see, after fees. And I profit from all of this. So this actually has a risk revenue score of 0.87. Now the risk revenue score is one of the most important, if not the most important metric that you can use from 3commas. I want you to watch how that number changes, guys. We want that number to be as high as possible when you're running an options play. If I click this, a 0.95, 1.14 is great. And what that's telling me is really how much am I risking versus how much do I stand to make. Now when this gets very high, that's quite good. But the issue is that the probability that I'm profitable goes lower, but the payoff if I am profitable is quite high, right? With only a $200 loss, I could stand to make $502, but that's assuming a fair amount of bearish volatility. And remember, guys, that when we're using these options plays, when we're building these options plays, this is something that you do not have to hold until expiry. You don't have to hold for the next 14 days and wait till 2 Fridays from now. You could even close this options play out early. If let's say that this goes very well, and let's say price is chilling at like 350, but you think that for whatever reason price isn't going to go any lower, you could actually close out this trade and maybe even have more profit than what's being shown here, than the 203, if you close out early. So that's another thing you could do. Let's say in 3 days price is at 350, you could just take profit. Or let's say price goes to like 380, you could probably just take the loss. But the beauty of this kind of specific play on volatility is it doesn't matter if price is at 390 or 390 here, or if it's at 520 bucks. You lose the same amount if you hold this play. Okay, so that's known as the bear put spread. Now let's do another scenario on Ethereum. I forecast that I have no idea whether price is going to go up or price is going to go down, but I think that there's going to be a ton of volatility. What contract do we use? What kind of options play do we use? Well, we're probably going to want to use a long strangle or a long straddle. These two options plays assume a fair amount of volatility, but you don't know where price is going to go. Let's go look at the long strangle. So with the long strangle here, you can see where we're unprofitable in red and where we're profitable in green. Max loss, I'll put this at 200 again. That's the max loss you lose if price goes down here, as you can see. Perfect. And let's say that I expect just a lot of volatility. I'm going to increase this volatility thing here. Well, if I keep increasing it, eventually it'll say I can't. But let's say I increase it so much. This is a lot of volatility assumed. But with the beauty of this is that if price bursts out either way, up or down, I stand to make a fair amount of money. But if I really lower this down and increase the probability of my success, then the payoffs go down a little bit. Then here, if I do something like that, which isn't advised, but you can do this, I have a break-even price of 345 on the downside, and I have a break-even price of 444 to the upside. So if price is above 444 in 2 weeks, or if it is below 345, I make money. So 345, guys, is here, and 444 is right up here. If it's above or below that in 2 weeks, I make money. And if it's above or below that within the 2 weeks, not even at expiry, I could even just take profit for a little bit of money. So this is something that we could run. Now, the really cool thing about this is, let's say that I lean slightly bullish or slightly bearish. Let's say that I don't know, guys, whether price is going to go up or down on Ethereum, but I believe that it's more likely that we're going to go down. I could click this. Now, if I click this, I'm shifting the graph such that I expect a little bit more of bearish volatility. So as you can see here, let's say I click this like that. Clicked a few too many times. So let's say that I'm really assuming a fair amount of bearish volatility, and I'll increase this once. Then you get a payoff graph like this, That takes into account a little bit more. And you can see my risk revenue score is quite good. It's at a 3.41. But let's say I click this, really, really bullish. As you can see here. I actually, guys, I don't know, is that correct? Because when I'm clicking bullish, when I'm assuming more bullishness, I wonder why it's doing this kind of payoff. I think these are reversed on this one specifically, because this would assume more bearishness when I click this. Weird. Yeah, so I don't know if that one's correct, but let's go to long straddle and go take a look at that. Same thing. And I actually prefer long straddles more than long strangles. When we talk about options, I just like them a lot better. My personal preference, I feel more comfortable with them. So with the long strangle, we can't really change for volatility, but we can change for trend. Let's say that I'm just super bearish. I think I have to click the bull sign because I think the bearishness sign is a little bit broken. If I'm bearish and I do something like this, oops, sorry guys. I don't know why it keeps doing that. Perfect. So if I'm a little bit more bearish here, I can see that the current price is 388, right? But my break even here is at 354, but my upper break even is quite high at 465. But if I click this a few more times, let's see here, I can actually change those break evens. So now my break even is a little bit lower at 339, but my upper break even is a little bit lower as well at 440. So the beauty of this is you just type in your max loss, the maximum amount that you're willing to lose. You can even tell the bot on 3commas, hey, do you feel a little bit more bearish? Do you feel a little bit more bullish? How much volatility are you forecasting? And you can do this, you can make this thing do a lot of different things. So let's say that I want to do I want to sell volatility. This is a little bit more dangerous, but do not discount it as a strategy because it can work. Let's say that I'm actually shorting volatility. So what I mean by that is, let's say that I'm doing something like a long condor. A long condor assumes that price doesn't really move much. I'll show you what that looks like. Yeah, like that, guys. So this assumes that price doesn't really move much. So this means that if price stays between 374 and 395, I make money in 2 weeks. Let's say I don't want that and I want to do in 1 week. Well, that looks ugly, but is there any profitable condors we could run? Let's see here. Doesn't really look like it here. How about if I change the expected trend? No, looks like it doesn't like the in 2 weeks, in 1 week. So we can go back to just this long condor. But there are other shorting volatility plays that you can do as well, such as the long butterfly that's about to pop up there. That one doesn't look great. It's really this, Deribit's really telling me that I should not be selling volatility. It's really wanting me to buy volatility, as you can see, right? So yeah, I'm going to probably end this video by just showing you probably the simplest, which is just long call and long put. So long put would assume that a long put is probably one of the simplest things you can do in options. I'm expecting very high volatility, but I'm expecting that volatility will be the downside, and I want a fixed loss over here. You probably know how this works already, But let's say I'm very, very, very bearish. I'm just going to keep clicking the bearish sign. I can even accept a payoff graph like this, so that if price actually ends up dumping, I can make quite a large amount of money. Now, the last thing I will say about this, and you guys can play around with this as you would like, is again, you can close out options before they expire, especially if you see a large amount of downside volatility, but price isn't below your break even of, let's say, 347. Let's say the price right now dumps from 390 to 378, and you think that that's it, price ain't going any lower. You could actually go long on this put. That put will 100% make money. If right now at this moment price on Ethereum fell from 390 to 378, that long put price would just skyrocket, and you would make a fair amount of money from buying that put here, and then you could just sell that put on Deribit and take the profit and leave, and then maybe hop into another options contract, potentially just go into Bitcoin, right? And look for some plays on Bitcoin. So that's going to be it for this video. I'm loving this options bot. I'd recommend you guys paper trade it first before you go to your real Deribit account. But if you guys have any more questions on how options plays work, contact me in the YouTube comments, or you can just shoot me an email. And I will say that options is one of my favorite, if not my favorite way to trade the markets. So this is a tool that I highly, highly recommend. It's pretty cool. With that, happy trading, and I'll see you in the next one.